And it's my pleasure to be in the panelist with all these team leaders. It is a very diverse group with Sachin sir from Bureau, Manish from L&D Finance, from the technology side, Aman, and as well as Samir from the NBFCs, and all taking care from the personal loan or the individual loans to the unsecured business loan, right? So that's going to be primarily focus going to be there. I think individuals we have seen, right? In case if you require a loan at the time when you are trying to buy an iPhone 17, and that time typically you would like to get your loan get cleared, right? EMI loan and all these things. You want instant, right? Even the business side also, and if you talk about the unsecured business loan, extremely, let's say for example, an MSME receive 5 CR of the purchase order. At that time also he needs to have that kind of the loan get sanctioned as early as possible. So with the demand of the credit, consumptions as continue to grow and consumption-led lending is continuing to evolve, I think that's where that, I think we are looking at the speed. So that's where the primarily going to be the discussion, and without taking much of the time, I'll get into directly with the discussions. And I'll start jumping with the Bureau, who is in the center of driving this whole ecosystem for the data, as well as which enables primarily your faster lending process. So with Sachin, if you can introduce yourself and maybe just focus on the how do you see the data intelligence, be it on the bureau data, combination of banking data, or maybe the alternative, I'm not sure. How do you see the entire evolution of the data intelligence helping this process, instant credit boom in the country, right? And where do you see the future going in?
Thank you, Shashank. So, I hope I'm audible. It's clear, right? Yeah.
Guys, can you hear
Can you hear? Okay, great. So, thanks, Shashank, for inviting in this panel. I'm Sachin Seth. I take care of CRIF entities in India as a regional MD. And as Shashank mentioned, we do have a credit bureau, CRIF iMark. We do have CRIF Connect account aggregator and a couple of other data science and credit analytics companies. So I think the point Shashank mentioned, I'll probably give a perspective from data and information, what is needed to provide the instant credit. I think most of us here who belong to the BFSI industry, we have seen the evolution of how the credit assessment, credit dispersal, monitoring, etc. has gone through in the last 10 years. And we all know that, I mean, it's very cliche for me to say that, you know, Jam, Trinity, this. I think we have heard these names tons of times. But I think what I'd like to bring to the table today is that, see, right now we have reached a stage wherein there is a plenty of data. It's available in different silos. There are sort of stacks which have been built as a part of the country's digital public infrastructure ecosystem. Credit bureau is one of them. Account aggregator is another one. And then we have a lot of other ecosystems being built, like a unified lending interface or other things, right? So today, I think the problem is not about underwriting and assessing a customer. It's about how fast you can do it, how accurately you can do it, and I think the most importantly that how can you avoid the fraudulent part of it. Because as we know in lending business, you can lend to 100 people, but if you make mistake even with 2 people, your book can be written off completely, or you can actually get into a negative side of the sort of profitability, or let's say become loss making. So having said that, I must say that today the data, the quality of data, the enrichment is happening at across the board. From bureau perspective, I can tell you that even regulators have been supporting it significantly. We were last year till January, we were like a monthly submission of data. We collect data from 4,000 lenders. So you can imagine the size of data it is. Today we have 35 crore live, the loan, let's say borrowers in the, country. Out of them, 7.5 crore are MFI as well. Very interestingly, one data point I'll mention here is also that Gen Z, which is 22, 27, 28, which is what we all look forward to do our business in future, 2.9 crore people got added to the credit in last 1 year. So this is how things are happening. But I'll probably take a pause here and give it back to Shashank. But this is where it is. So there is a mammoth amount of data. There is so much of kind of insights available. It's up to now lenders and providers to see that how they use it in a right context and to make the journey more friction-free. At the same time, also risk-free for the lender. Yeah. Thank you.
Thank you, Sachin. I think it's a good perspective to start with, and I directly jump to the lender, which is Manish. Manish, if you can introduce yourself. And as Sachin said, that data is available, right? But lending is a regulated business, right? So how do you balance that use of this data with the governance structure, taking care of the risk, as well as that lending is also moving very much, especially in this side, instant credit, lots of the partnership, right? So how do you balance the governance, risk, and the partnership structure while continue to use this data also?
Shashank, thanks for inviting and thanks for the wonderful question. Uh, so I'll actually break this down. When you talk about instant credit, there are three parts, or rather I would say four parts to instant credit. One is data, and I think Sachin correctly pointed out that there is huge amount of data. So there is a data for underwriting. There is a data for, so underwriting would, again, if I have to break it up, underwriting would mean intent as well as affordability, right? So you have account aggregator, which will give you affordability. You have intent, which is basically coming in from the bureau. And there is a huge evolution that's happening on the bureau where basically with daily submissions, with 15-day submission that is there, I think you are able to very rightly or correctly evaluate the customer. And then, of course, so that is one part of it, which is data. The second part is basically the AI that, or rather the AI models that you actually put on that particular data to evaluate the customer. So at L&T Finance, we've kind of developed a proprietary underwriting system called Cyclops, which uses a lot of data, both alternate as well as non-alternate data on the regular credit data to actually evaluate the customer. And that evaluation happens on a real-time basis. Now that is the second part of it where AI has actually evolved to create real instant approvals. At the time when I started my career, we used to have underwriters which actually sat down with files with documents which looked at every single part of the document, and then of course then there was a decision that was taken. Every decision used to take either a couple of hours or even days to happen, right? So that is the second part of it. Third part is processes. So if you think about, so we can use AI, we can use data, but if your internal processes are not truly set up as digital, then you will have issues to actually disburse instant credit to the customer. And that's where the partners who you are partnering with will actually come back and say, okay, I want to actually have prioritization amongst all lenders who actually have a completely digital journey and hopefully give loan as fast as possible. So what we've done internally is that we measure the time when the application comes in to the time the customer, the money gets disbursed in the account. So you have to ensure that all your processes are actually created in a completely digital fashion. So you do your underwriting, you do your KYC, which of course there is CKYC, there is EKYC, and you have to figure out how do you do that in the best possible manner. And then you do your mandate setups and all of that. So every single part of the process needs to be looked at by lenders, and it's not just one part that you can digitize and you can say, okay, I will actually give instant credit. Now, all of that has to then marry with all the regulations that are there. So you have to ensure that you are actually ensuring that you are properly doing the KYC. You're actually and with RBI, of course, evaluating, and I think rightly so, evaluating every part of the process. No, they don't just look at high level, but they get deeper into understanding what the customer experience looks like. Right, and so basically these are three, and the fourth one is Shashank, that you rightly mentioned, which is all your digital partners. So there, the kind of integrations, the kind of deeper integrations that you do with each of these partners, and then evaluate whether at every stage, and you keep improving that, you evaluate at every stage what and how the customer journey looks like, right? And they, of course, give you a lot of alternate data, which then can be used for your underwriting processes. And how do you ingest all of that data becomes very, very important. So when you start looking at these four parts of the process completely, you will be able to kind of, one, marry regulations, ensure that you are compliant. It has to be risk first, compliant, technology, and data backed. These are the four mantras that you actually take. And we've, luckily over the last few years, rather I would say in the last 2 years, we've evolved all our systems to actually get through that particular process end to end. And we've seen the results that are there, which are now showing in our business.
Oh, thank you, Manish. And I think as you rightly said, right, it's that way forward, right? You need to embed that whole of the governance aspect or the risk aspect in the part of the process and the technologies itself, right? So thanks, Manish. And then I'll come to Aman to bring a different perspective, right? More from the technologies, right? From the technology perspective, you have heard from the bureau as well as the lenders, right? Manish has spoken about already the change that what is taking place. But from your understanding from the tech, how is this instant credit? What are the factors which is driving this shift, and what are the different bottlenecks that you see which yet to be solved, right? And not only from the individual loans perspective, but also maybe the unsecured business loans, which anyway I'll touch upon with Samir.
So I think in
Maybe
today's,
first you can introduce yourself. Sorry, I missed
yeah,
out.
I'm the co-founder and CEO of Grey Labs AI, which is a voice AI solution for financial institutions. And we work with more than 50 large BFSI clients as our customers. And we are Series A funded, raised almost 100 crores in capital in about a year since starting. So on your question, right, I think in India today, food is available in 10 minutes, grocery is available in 10 minutes. Why should credit not be accessible in 10 minutes to, as big of an audience as possible? So, like, even I have seen the credit ecosystem evolve in the last several years. Credit cards have, we all receive calls for pre-approved loans, pre-approved credit cards all the time, right? I get multiple such calls maybe every single day. I think there are a few areas where a lot of improvement can happen. First is people who are not a part of the credit ecosystem yet, but they want credit, right? As I think Sachin mentioned, 35 crore people have access to credit, but our country's population is roughly, more than 4 times of that figure. So there are about 140 crore people. We discount people under 18 who may not want credit, but even then there is a large population of the country, which are, the data footprint is so low that you cannot lend money to them. So that is point number one. So on Sir's point, Manish Sir's point, which is, how can you generate more data? The first, one of the pillars you mentioned is data. So with these to get these people involved in the credit ecosystem, what data points will be required? I think with internet, with the smartphone revolution, with the geo revolution coming in, a lot of data points are getting generated already. Now, let's say, there is account aggregator framework from which one bank is aware of the transactions of the customer through, other banks, or with credit bureaus coming in, you have some awareness. But imagine the alternate data sources of the customer, be it, maybe social media, maybe SMS, maybe, UPI is generated a lot of data now because of, we all do transactions of 20, 30, 40 rupees every single day. So how do you bring these people who are not under a formal lending ecosystem as a part of lending ecosystem using alternative data sources? I think that will be one big challenge which the country will have to solve. That will expand the market. That's the need of the hour, because yesterday also I was a part of a session and somebody was there from Bajaj Finance, and he literally asked me ki, market will get saturated with all of these things, right? But I think the current market might get saturated with voice AI coming in, which will make infinite number of calls at every point in time to every single person. Let's say all of us get saturated, but imagine another room of people like us opens up who doesn't have access to credit. That will expand the financial services industry of the country as a whole. So that is one point, right? On business lending, I think there are a fair bit of data sources now, which is, there are lenders who offer credit on the basis of GST data, on the basis of, other data which is there with government and filings and all that. I know of some companies who offer loans basis the personal collateral of the business owner, be it the house, be it the car, etc. But there also it's similar problem, right? The credit growth will probably happen in the tier 2, tier 3 parts of the country where people are not a part of the formal ecosystem, which is where I feel technology will play a big role.
No, thanks, Aman. And now, Samir, coming to you, and you can introduce yourself, and I'll ask you from the instant loan requirement is there in the business side also, like MSME, if you look at it, which is almost like, especially micro side, right? Almost 4 crore of the micro companies are there, and there's still, typically their demands are instant, right? So how do you see that entire that shift taking place in the MSME unsecured business loan side?
Thank you. Thank you, everyone, for, first of all, making us here together on this forum. And it's a very intriguing topic right now. So while instant credit has seen light of the day when we look at in terms of individual financing perhaps, but business owners or the instant credit to the SMEs, MSMEs particularly, as you were referring to the turnover of businesses, let's say between 1 crore to 5 crore or 1 crore to 10 crore. So that side is yet to see the true BNPL kind of revolution for businesses. Right. So, and again, going back to Manish touched upon a very instructing point, wherein, you know, the digitalization or a digital journey for me is not something that is completely different or has to be something, a separate swim lane altogether. Digitalization, whenever you talk about easing out the processes, whenever you talk about the source of data, whenever you talk about the technology, all of them have to talk to each other in a single ecosystem so that each and every step of your value chain, the process value chain, keeps on enhancing. And that's how we will keep on graduating to a stage wherein we can, you know, decide maybe not a credit up to 50 lakh, because that definitely will demand underwriting financials, that will demand underwriting cash flows. But maybe up to 15 lakh, up to 20 lakh, up to 25 lakh as the market evolves, as the data structures evolves and the technology keep on kind of, you know, giving us the impetus. So that is how we are looking at currently in the MSME landscape. And particularly to the topic that we are talking about, so for me, the three key points remain is the uh, consent layer, as long as the consent is transparent, as long as it is contextual, and it is enabling commerce. So that is how this instant credit will revolve for this particular space.
Thanks, Amir. And Manish, I'll come to you. You spoke about the partnership-led model, right? And how this you build that governance structure to balance it out, right? Now, just continuing that same discussion for this embedded credit as it scales, like how do you define that what need to be controlled by the human and what need to be left to the machine or this technology to decide upon the risk? So maybe if you can just touch upon that part.
Very interesting, because when we look at human versus what we do from an AI perspective or what we do from a machine perspective, so there are rules that are there which the machine kind of gets on. So what we've done as a part of our processes is that 99%, or I would say 97, 98% will actually be completely driven by the machine. And whatever that we drive are based on all the data points which will evaluate whether the customer has a good intent, has a good affordability, and also whether he's contactable or not. Now, contactability is one area which always kind of concerns people, especially from a human versus manual perspective. So that is one. Now, how do you kind of also ensure that particular, so the data that's available, let's say with the partners, etc., where exactly the customer is applying from which app, and of course with DPDP, with the consent of the customer, can you actually get the location of the customer and evaluate that against where he's staying? So that kind of today gives that comfort to underwriters that yes, in case the customer kind of forgets or he goes or he defaults, can I contact him or not? For that 3% of the cases where there is the customer is on the border, can we actually have a set of underwriters which today are evaluating the customer? But even for those, what we've done is that we are evaluating, or rather we've implemented this in some other businesses which are a little larger, to actually take all of this data, and basically we've developed a co-pilot which effectively makes the life of the underwriter much more easier, and he can actually evaluate that application and then take any deviation calls that needs to be taken. So there's always a balance between saying that is it 100%, and again, it depends on which product we are talking about. So in an unsecured loans versus an MSME loan, versus the ticket size that you are actually giving within each of the products, etc., or a secured loan. So there are processes that you'll need to evaluate, which also ensures that you are not kind of completely 100% dependent on the machine, but you're also kind of taking care of cases which are today, for example, a little bit grayer, and there are manual underwriters who will need to take the call. So that's how we kind of balance both of these aspects.
Super. I think the technology may drive the lending, but human intelligence has to be brought in the picture, right? So, continuing the discussion from Manish, Sachin sir, so you have seen work with multiple lenders, right? You have seen that how the lenders are using the data and all these things. How do you see the data as well as the systems level checks are being introduced by the lenders, and what are the possibilities are there to embed into the whole process to identify those risk signals and take care of those risk signals?
First of all, lending is a tricky business. You are giving money. And on a lighter note, you know, there's people say buy now, pay later. There's also say buy now, pay never. So there are a lot of borrowers we know, and especially given our country, and not only our country, I mean, if you look at Southeast Asia, Vietnam, Philippines, Indonesia, even Bangladesh, the behavior is pretty similar. People are credit starved, credit hungry. So they tend to take, many times they get over leveraged because of various personal situations. And then they do the rolling of loans one another, and then they get into a trap of that, right? So naturally one has to be very careful that, you know, whom you are giving the loan. Now let's come to the point that how do you really assess that, right? Typically, old philosophy goes, you do the identity check, you do the address check, you do the intent, you do ability to pay, etc., etc. But I think using technology and data in everything, I think many of the lenders have mastered the art. But I'll just throw some lights, and even I've been, in my previous avatar of consulting, I used to work with clients. So first and foremost, in India, the addresses are not standardized. The more deeper you go to the hinterland, you will figure out that, you know, behind the petrol pump, next to the pawn shop, this is the kind of addresses you get, right? Even the names of people, and especially in the credit bureau, you know, we are not allowed to do the PII data checks. So we depend on voter ID, we depend on PAN card, we depend on, and that's what we provide back to the lenders. Naturally, we all know that voter ID is, every time you make a voter ID, the ID will be different. The number is different, right? So we are, while we are a digital country, we are so democratic country that we are still dealing with some of the over democratization of data. And we are still figuring it out that how we control the fraud, right? So in this, generally the rules are, I mean, you know, you use machine learning algorithms, etc. You look at that, okay, at least there is a 70% address match. Because 100% address match, you will never have it in India. Very, very difficult to get, right? Then you come to the point that, okay, you have typical characteristics which you deal with. I mean, I remember in my days of lending advisory, one of the lender in digital platform mentioned to me that, you know, I do not want to give loan to a urban, male, mobile, unmarried person. I said, why? He said, because he'll be gifting a mobile phone to his girlfriend and he will never be able to pay back because he's working in a call center or something, right? I'm just giving you some of these things, right? So basically, how do you identify that guy? You identify that guy because he has changed the address 3 times. He's employed with a typical company which pays him enough to really manage his life. But obviously his aspirations are a lot more, right? So you have these markers. You have in the grid, you have these markers, and you keep figuring it out that where I can look at that small indication from the data. Could be unstructured data, could be, now that we have account aggregator, look at that, you know, what are the payment profiles? Where the person is spending a money, right? Is he spending on healthcare? Is he spending on the fuel? Is he spending on the restaurant and bar? Is he spending on smoking? And you basically figure it out that this is actually the kind of things which will lead to making underwriting stronger and stronger. So I'll rest my point here, but I can tell you, I know the people sitting here and the people who are in the audience, underwriting is becoming a very, very interesting game. The more you get technology, the more you get aware of what people do, the more you get scared of what people are doing, but at the same time, you have to make a business out of it. So you figure it out that who are the people who will not do what they are not supposed to do. And you give the money and then hope that you will get it back, yeah.
Thanks, Sajin Bosa. On a lighter note, so that's why whenever I try to buy a liquor, I try to buy the cash. Okay. So, Samir, coming back to you again, so we spoke about that, what are the risks are there and how typically you can use some of the data points to take care of the risk when giving an instant loan. How do you, what kind of the data points or how do you take care of the risk when you're trying to give the loans in this kind of the segments, right? While this is also getting lots of the data points are emerging for the MSMEs, be it on the bureaus, apart from the bureaus, the GST data, and lots of more, right? So how do you start seeing that what are the data points can be used or by the for the MSME unsecured loans, so that some of the risks can be identified and can be taken care of?
Yeah. So as my co-panelists have already touched upon, so we have to look at into 3 or 4 broad categories. So one is the eligibility part. So that is pure mathematics. Whatever formula you will kind of agree on to as an organization, and that mathematical formula will give you an answer. So that can definitely be coded. That can definitely be replicated and brought into the models. Second is the underwriting layer. So when we talk about the underwriting layer, that's where, there is a lot of scope of bringing in different data insights, different technology. And third is the sanity checks, which he just touched upon. So whether it is address, whether it is KYC, whether it is, the stability index, whatever way you want to look at it. But once you look at all these 3 together, so the entire piece goes into one single point for me, that by kind of, getting into the race of instant credit, we need not kind of dilute the decisioning here. So the purpose here is not to kind of, so typically whenever we used to hear fintech journey or kind of a digital end-to-end, 3-click exit kind of a journey, people tend to get an impression, one, it was a easy money, and second, the journey itself tend to kind of, get onto a side wherein we are thinking of how we can kind of, give a waiver for this particular process, this particular screen, this particular piece. But when we come to this side, and especially with the help of the technology and the data points now so much evolved, whether you talk about GST, you talk about AA, you talk about even simple banking. On banking also, you can get into multi-variable analysis with the help of scorecards. On the GST side, you can do a combo with banking and GST with respect to the turnover growths that are coming, patterns, spikes, seasonality. So when you look at all that together, that's where, for me, actually, a true instant credit is when you talk directly to the source of truth, rather than relying on any kind of a paper, any kind of a input coming from the user. So once you reach up to that, for today in our journey, while I can also claim that I can give you a first cut of instant credit with 3 fields entered by you, but at the same time, I am very much kind of, focused that at the back end, 40 APIs fires. Bare minimum 40 APIs fires that talk to each and every possible touch point. PAN, NSDL, Aadhaar, KYC, CKYC, DGKYC, face matches. So all those things are running in the back end, and I am directly talking to the source of truth rather than any kind of a paper, any kind of a input from the user. So that's how we need to keep it contextual to the end user and keep on getting these data insights and the data signals which are now available throughout the journey and throughout the data schemas.
Thanks, Amir. And I think you touched upon a very critical point. In fact, the morning also I was just taking session on the MSME. I think it's entire that understanding the value chain and the segment becomes very critical, especially in this segment, right, MSME. So now coming to Aman, you have heard from the lender view as well as that bureau view. How do you see that AI playing the role in the whole of the entire lending life cycle, and especially more focused from the instant credit per se?
Sure. So I think what I gather from the conversations of the panel members here is that, lending money is easy. The restriction is when ultimately you have to collect the money back. All the data that you gather to lend money to someone is actually required because you have to take a decision whether this person will be able to pay back or not, right? Very simple example, if one of our friends or cousin calls today, any of us here, and says, can you lend me 1 lakh rupees? First, think of the data points we will start thinking of, right? We will think, have they lost their job or something? Where are they planning to spend this money? Are they facing some kind of emergency or not? Which is the data points I think the people here are talking about, right? Forget about the bank and the borrower. Think of human to human. When somebody asks money from us, what do they want? So the first part is where technology can help you gather a lot more data points. Why? Because your cousin or your friend might be lying to you that I have a medical emergency, but in reality, they are using that money to fund a vacation and may not be in a position to pay. So all these data points, they help you gather information about the borrower to understand their intent, which I think Samir just mentioned 40 plus APIs, right? If, GST data source, KYC, etc., etc. Like I'm a business owner, if I claim that my turnover is 1 crore rupees per month, let's say, and I go to him and say, please lend me some money as a working capital. How does he verify that my turnover is indeed 1 crore rupees a month? Right? He can look at bank statement and it can give you some cash flow analysis, which becomes an independent data point. If he looks at my, some MSME owner who is dealing in cash and books are being looked at, then you can't rely on that data point because that may be completely fraud. So banking data, the transaction which is happening by a third-party reputable institution, which is very reliable, or GST data. If I'm paying GST to the government at 18% on my business, that actually tells you a picture of my turnover because I'm in software business giving 18%, GST, etc. So these data points help you underwrite and understand the intent of the customer at the loan, underwriting level. That's number one. I think Manish sir also mentioned one point on contactability, which is where people like us come into picture. We offer voice AI agents which can call these customers, talk to them in their regional language. Humans get exhausted. Humans, beyond a point, we all get tired. Imagine yourself working in a call center and making hundreds of calls every single day. By the time of evening, you will get exhausted. Humans are unpredictable. The regulator is very clear that if you lend money to someone, you can't be rude or you can't use foul language towards them while collecting money. You have to collect with care, which means the collections becomes another area where a lot of human efforts is required, which is where AI technology, it can automate. AI can stretch the customer to the level, but will not cross the boundary where you flag that call and say, this is breaching my regulatory guardrails, where AI is, using a foul language. The human can use a foul language. I've heard of situations where customer was threatened. Recently, I think there was 3 months back, there was a news of one of the largest banks in the country. Allegedly, a collections agent had misbehaved with an army officer, telling them that you are not able to pay the loan, you are uneducated, and that's why you are employed in the army. That was the statement allegedly made by the collections officer of a bank to an army officer. It's so bad, it's so disrespectful at the national level. Right? So AI will never do all those things. So the contactability part, the collections part, the data gathering part, AI can add a lot of value across the entire lending value chain.
Thanks, Aman. And I think I have lots of the question, but I'll give an option if any question is there from the audience. And if the question is open, then you can just ask question, or we have questions to a specific panelist. Please tell the name and then, yeah.
Hi, this is Alok. I head product strategy and sales for Trusting Social. So my question is around the consent layer, right? So we are talking about proliferation of data, profile-based data, geo-based data. So government is coming out with a consent layer and a lot of players are trying to create a layer around consents, right? Do you guys, so lenders, credit bureau, Samir, etc. So do you guys see a standard consent layer coming through, or you will still manage it at journey level, right? I wanted to understand that thought from you guys.
Yeah, so thanks for the question. And I think this is a very pertinent question considering whatever is happening in the DPDP rules, right? Now, the good part, and I think India has been the most advanced country, even better than what happens in Europe, where your GDPR is coming in, that they've given that flexibility to ensure that the customer, and clarity to the customer, saying that this is the data that is getting used, this is the purpose that it's getting used, and after the use of that data, you can either, you have to delete that data after a certain point of time. So the way, at least we are evaluating, and we've kind of started the implementation of DPDP rules. We do that anyways in the account aggregator. But clearly at every stage of the journey, you are telling the customer that this is the data that is getting used. Now, whether it's a single consent, whether it's multiple consents, depends on what kind of data that you're getting used and who's the owner of that data. Finally, the owner of the data has to confirm that this is the data that is being passed on with the consent of the customer. And I think somewhere throughout the process, you'll have to evaluate it data by data and ensure that the customer is given a clarity to say, this is the data that is getting used for evaluation, and this is the benefit of using that particular data, for which either you're getting a better offer, you're getting a better interest rate, or even you're getting approved or not. So all of that is a part of the process which I'm sure will actually become better, because you'll have access to much more data than what you have today when the DPDP rules actually get 100% implemented across all lenders across the country, rather, I would say.
Hi. Hi, my name is Bhuvanesh Shukla, and I have been in a CXO position for the last 14 years with multiple banks. My question to Aman is that he said that AI will not breach the limit. What I see is that with my IT background, testing and validation is not so easy for the AI systems. And also, in case if the hacking happens, or you can say that insider attack happens and the systems are breached and system starts misbehaving with multiple customers, especially female customers or maybe senior citizen, things like that, it will be very difficult for the lender to handle that kind of situation, and the regulator will be bound to take very strict action. So what is your response on the same?
So good question. I always say that AI is not perfect, but AI is more predictable and better than humans. That's a short answer to your question, because you can test the guardrails of AI in a restricted environment, and you will be able to ensure that once I've passed thorough testing, if I scale it 1,000 times, it will work in a similar manner. It will speak the same language. It will generate the same output on similar set of data points for underwriting, or it will talk to the customer in a similar manner. It will not, like humans may, you have a fight with your someone, some friend, some wife, family, husband, etc. And then it's a bad day for you. You can behave in a very different manner if you're a telecaller, human telecaller, right? Or let's say you are negotiating some loan amount with the customer or some interest rate with the customer. If you have a larger incentive on that loan amount, you will probably negotiate harder. If it's a smaller incentive, you will give up easily. Right, so AI will never get exhausted. AI will work in a very predictable manner. It does not have a problem of, the human emotional aspect. It's a feature. It's also a bug, because we humans have emotion and empathy. That's what differentiates us from machines. But at the same time, in very standardized, large-scale processes, which are driven by data, which are driven by a very well-defined system in place, you don't need emotions. You need data and predictability at scale, which is what I feel the technology can deliver better than humans.
So thanks, Aman. I think it was pretty interesting discussion. I don't know how the 40 minutes passed away, right? Still, I've just completed my quota of the two questions. But I think we touched upon really, and at least on the acquisition side as well as the lending life cycles part of it, both on the individual as well as on the business side of the loan, and getting that primarily that how the data as well as the balance of the technology is a human dimension that we looked at it. So I'm really thankful to all my panelists, Sachin, Manish, Aman and Samir, for sharing your real practical insights from your work experience. Thank you everyone. Thank you for joining us. Thank you.
Can we give them a huge round of applause? What an interactive session. Now I would request Shashank sir to please extend a token of appreciation to Sachin Seth, who is the Regional MD, CRIF India and South Asia, followed by Manish Kumar Gupta, Chief Executive of Urban Unsecured Assets, Payments and Digital Partnerships, L&T Finance. Next to Aman Goel, co-founder and CEO, Grey Labs AI. Then to Samir Gupta, Head Product Unsecured Business Loans, Hero FinCorp. Thank you so much, gentlemen, for your valuable time. Can we please come ahead for a group photograph?